Hello and welcome to Leviathan News. It is a beautiful Valentine's Day. I hope everyone got flowers, chocolates for their significant others. If you didn't, you're going to be in the doghouse. So maybe if you're listening to this podcast and you haven't thought about it yet, you should go out and do it. I definitely did because
Save yourself, guys. Save yourself.
I want to go. I want to get those good boy points. You know. So
Points again. You're doing it. You're doing that for points as well, man.
I trust that DeFi Advisor has his on delivery. They're on the way. So to me,
Of course. Naturally. Started sending them about 3 weeks ago to make sure they arrive on time at Texas.
yeah, I'm sure they'll be very fresh.
So I'm Sam McCullough. I'm one of the hosts, and I'm also joined by DeFi Advisor, my co-host. How are you, sir?
I'm good. Happy Valentine's Day, man. An honor to say it to you.
Maybe we should have like a pink background today, but we are also joined by the indomitable Cryptovestor. And
how you doing, guys?
What's up, sir?
Thank you for having me.
And also Kmets.
Howdy, folks.
What's going on? Both members of the A team at Aladdin DAO, and
I'd say that I'm one as well on that one.
Oh, 3 members of the A team here today. Yeah.
You're outnumbered here, buddy.
Welcome to the A Team
That's
show,
what-
everybody. We're happy to be here and have Sam as our guest.
Yeah.
Taking over the Leviathan stream, an inside job.
I love it when a plan comes together.
Yes, Hannibal. We're dating ourselves, aren't we?
Yeah.
Fine.
But I hope all 3 of you are doing well today on this wonderful Valentine's Day. Actually, do you know where Valentine's Day came from? Like why we celebrate it? Must be something to do with like a saint.
Because they need to sell a lot of chocolates.
Yeah, Saint Valentine's. Is a Catholic saint, obviously, but I'm not quite certain of the significance of his sainthood, so can't say anything to that.
I know. I should actually look that up today. My kid was asking me about it today. That's the only reason I asked. She was like, "Why do we celebrate Valentine's Day?" And I was like,
I thought you were going to tell us why.
I don't know. I mean, like, I don't want to kind of like leave it to the chocolate industrial complex, but
You didn't like tell her it was like Stark airdrop day. You didn't,
it is StarkNet airdrop day. Did you guys check? Did you get anything?
I checked. I think I'm gonna get
What?
something.
It's StarkNet. It's
Yeah.
StarkNet airdrop day. Really?
Right.
It
Oh my
is.
gosh! Yes.
Did you guys get anything? What was the criteria?
Oh gosh, they had a bunch of stuff.
Yeah, it was a bunch of stuff. I think you had to like. I think the cutoff date was back in November, actually. So if you had made a couple of transactions on StarkNet or you had been essentially working with the ecosystem, I think you're eligible. Yeah.
And it's an interesting airdrop because they actually like took a snapshot of over a year and a half ago of people that were staking at the merge, which I happened to be doing at the time, and so because I have never interacted with StarkNet before, and so I apparently am getting an airdrop for that. So very exciting.
Respect.
Wait, does it go to LSD holders as well too?
I believe so. Yeah, it goes to the node operator or to whoever had the deposit address on the beacon chain. So I'm sure Lido's getting some. I don't know how they're distributing.
Sam is trying to think back, like what he was doing like 2 months ago.
So apparently, like 51% of the airdrop goes to users who made more than 5 transactions on StarkNet prior to November 15th, had been active for at least 3 months, and then transacted at least $100 in volume, and had at least 0.005 ETH in their account on November 15th. So they'll get anywhere between 500 to 10,000 Stark. The StarkX users will get it. So if you use like DYDX or Immutable X, RhinoFi, SoRare, you'll get 111 Stark. And also some community members as well too are going to get some, and then developers as well. So
Pretty cool. Happy Valentine's, everybody. There
And
we
then-
go.
and then also the Ethereum community gets some. So anybody that was running a a node back at the merge is going to get one. Solo stakers, so staking pools, and then also solo stakers get one. They're going to give some out to Ethereum developers, and yeah, looks pretty good.
Very
So
exciting.
probably a lot of older Lido stakers at the time probably will get something.
It's pretty cool. So, but we're not here to talk about StarkNet today, even though it's free money. We're about to talk about real money, which is FXUSD, which is the latest product from Aladdin DAO.
That's right. Yeah, and actually, I wanna correct your title that you have there, where it says how FXUSD scales to 1 billion with Kmets and Cryptovestor. It's actually how FXUSD scales to a quadrillion
There we
with
go.
Kmets and Cryptovestor, because
Yes.
we have exceptionally ambitious plans for FXUSD, and I'll kind of give a very brief broad overview, and then maybe Cryptovestor, you can kind of like jump on the
Sure.
back and kind of fill in some details. But
You
yeah,
see
so
why I like these guys, Sam? You see why I like these guys?
so FXUSD is the newest product offering from Aladdin's FX protocol, and we've launched FX protocol. It's been very successful so far with over $25 million in TVL. Our initial products were fETH and xETH, sort of proof of concept products to basically launch a novel new stablecoin product with fETH, and then also a novel sort of leveraged ETH product, xETH. And so, these have been very successful, adopted within the community, starting to get integrations within DeFi. And so we're really happy with it. We've got some pretty powerful partnerships that we've worked with Lido and with Frax and several others as well that will be coming on board as we launch FXUSD. Unlike fETH, FXUSD is going to be a dollar peg stablecoin. And FXUSD's kind of killer app is that it allows for really any yield-bearing tokens to be integrated into the protocol and have sort of a stable coin derivative. And so we're starting off,
Any yield-bearing token.
Any yield-bearing token. Yeah, we're starting off obviously with the most powerful LSDs with good, lots of liquidity and powerful mechanisms to sort of monitor the price with the oracles or curve NG pools. And so the rollout's going to be staged, but yeah, it's basically just going to be sort of a basket of LSDs behind it, ultimately. And so but yeah, I mean, and then we'll obviously have like farming products as well, where any yield bearing products can be involved as well. But FXUSD is very exciting. You can with all your fingers and toes, you can basically count the number of days to launch. And so we'll be having an article coming out here in the not too distant future, kind of talking about seeding for the to launch it, so that we have enough TVL to have a good viable launch and make sure that everybody has a good experience minting F and X tokens as well. So
So
very exciting. And
yeah,
go ahead.
We had you guys back on, I think, a couple of months ago talking about the original like it wasn't really like a stable coin, but it was a somewhat stable coin with the FFX
FETH?
protocol.
Yeah,
with
fETH.
fETH, right? So fETH has 10% of the volatility that ETH has, and the other 90% goes into the xETH token. So, like, what was the decision that you guys made to actually bring it back down to zero and make a fully stable coin?
Yeah, I mean, so fETH has worked out really well, and especially with folks that are sort of like ETH maxis, decentralization maxis. With integrating other LSDs into the protocol, if we sort of like kept that sort of 10% price movement, it would be like, well, you get a stable coin and you get a stable coin and you get a stable coin and you get a stable coin. So you just have like tons of these F tokens, right, for these various different LSDs. It made a lot of sense to just integrate them all into one stable token. And integrating, sort of a dollar peg stablecoin, it gets us sort of like that immediate adoption into DeFi, a product market fit, user adoption, and just sort of simplicity of use as well. And so sfETH we're still really proud of. It's still been a fantastic product, and has worked flawlessly really since day one. And so that's our two main stablecoin products are going to always be sfETH and FXUSD. And so FXUSD is basically going to serve as sort of like kind of like the mass market, sort of like all these large LSDs will funnel into it. And so that's sort of like the reasoning behind that.
And just so to kind of tag along on that, like FXUSD has some really unique features. It's really going to be one of the only decentralized stablecoins that, when staked, is going to earn that underlying Ethereum staking yield. And it's even going to be amplified more because you have the two token design. You have the X token, which gives up that yield, similar to the way Frax works with the two token design. So all of that yield that the X token holders give up goes to the FXUSD stakers. So now you have a higher APY in that rebalance pool. And then on top of that, you have gauge emissions. You have FXN gauges. So people like Frax and Sam can go ahead and vote with their CDX, or they can, there will be a bribe market that will push those APYs even higher. And then on top of that, as FXUSD is used throughout DeFi, like if it's in a curve pool with Frax, like paired against Frax BP, or maybe something like PYUSD, as that token, as the stablecoin is used, it's out of the rebalance pool, and the rebalance pool APY even goes higher. So it incentivizes more minting, more FRAX-ETH minting, and Lido staked ETH minting as well. So it's a very unique system and a very unique peg mechanism as well. So it was very novel at the get-go. That that's why we thought it made sense. And then on top of that, it also makes sense from a pairing perspective, right? You can pair with any stablecoin, which drives more demand for the LSDs, the underlying backing.
Yeah. So just so everybody knows, there's like two components here. There's the people who essentially want to take leverage, and that's done through the X tokens. And then there's other people who just want to take the stable output. So if you think the ETH is going to go up in the long term or medium term, you can take a bet on the X tokens.
Right.
And if you think that it's going to crap for a long time, you can just move into the FXUSD or the other fETH tokens, and those allow you to collect the yield that the X tokens give up. So
Exactly.
yeah, so there's always a balance, right? So as people shift from the either FXUSD or fETH into XUSD, it changes the amount of leverage on each side. So the more people that pile into XUSD, the less leverage there is that's going to be as things goes up, and then the more yield there's actually going to be for the FXUSD or fETH holders, for the stable holders.
Yeah, and just to kind of piggyback on that, and that was a fantastic description, Sam. Yeah, I mean, welcome aboard to the A team. You're doing great.
That's why he's a booster, right?
That's right. Yeah, he's nailing it.
He's the best. He's the best, honestly. Hands down.
As we launch FXUSD, we'll also be launching our gauge structure for FX protocol, and our gauges are going to be unique because they'll be dual gauges. They'll be going to both the rebalance pools, and then we'll also have gauges that'll go towards the curve pools, the LPs. And so it'll be very interesting to see, because some protocols that are like LSDs, like say Frax, will be able to incentivize not only their rebalance pool, which will kind of amp up the return on that with FXN token emissions. They'll also be able to, amp up sort of like the FX USD Frax base pool as well. And so, Cryptovestor can talk a little bit about how that's like very significant for other stablecoin providers within the space.
Yeah, because as stablecoins pair with FXUSD, again, they're amplifying. For example, Frax, they can vote with their CDX, right, to send emissions, FXN emissions to the rebalance pool. So the APY will be additionally higher. I actually feel, and it's not done yet, but I feel like the LSD's APYs are going to be highest in all of DeFi. They're going to be highest in the FX platform. And so, and because of this reason, because, you know, let's take Frax as an example, since that's close to everybody's heart here. Sam can go ahead and Frax can go ahead and, you know, vote with their CVX and send emissions, FXN emissions, and then they can also bribe on top of that, you know, and then if they pair, which I think that's part of the plan, they pair with the Frax BP, they are in essence taking supply out of the FXUSD supply out of the system and into DeFi, also amping up their APY. So it's very, very highly efficient for an LSD to use this platform. And so it's very symbiotic for LSDs to work with FXUSD and with FX and to get their LSD on the platform, if that makes sense.
Yeah, and even just for the Curve LPs themselves, you know, obviously the emissions for FXN will be going, you know, live with the gauges, and so like if you have a Curve LP, you'll be incentivized not just with CRV emissions, but also with FXN emissions.
Correct.
So this is
and
like
something else that's cool, which I know we talk a lot about FXUSD and about all of these different features, but we don't really hone in on some of these like kind of what I would call more advanced features. But one thing that I think is really impressive is the way, and this was partially because of the interaction with Cyril, who's another community booster, you know, the integration with CowSwap and aggregators in general into directly integrated to direct mint FXUSD right from the platform. So when you're doing a swap on CowSwap or, you know, any of these aggregators, 1inch or whatever, you're basically minting directly from the system.
Wow, that's so cool.
That's like very, very huge, because FX and FXUSD doesn't really need a curve pool. You need to let that sink in. It doesn't really need one. We're going to have them. We're going to have pairings. But in essence, what FXUSD is doing is it's basically, you know, taking the underlying asset, the Frax ETH or the staked ETH from Lido, and it's basically liquid with every single asset in DeFi automatically, because it's using those current deep pools to get its liquidity. So when CowSwap, when you do a swap on, say you have 10 ETH and you're swapping and you want, you know, whatever that value is in FXUSD, it's going into the back end of FX. It's minting that FXUSD directly. You understand? And so, and then when that FXUSD is swapped for, say, ETH again, it's basically taking the underlying asset, staked ETH, and swapping back to ETH. So it doesn't really need, we don't really need to build these huge curve pools like Frax does with bribing and AMOs. And it's a very unique model, very unique system. I don't know if you want to elaborate a little bit, Kmets. That's kind of my two second version of it.
Yeah, and that's, you know, there's just a lot of ways that FXUSD can be integrated into DeFi, and that's sort of like why we have such grand ambitions for it, and we're excited to roll it out here in the next couple weeks. You know, as I say, it'll be, you know, sort of a very carefully, you know, incubated launched protocol, mainly just because we have to make sure that we have enough F and X tokens to stabilize the system. So we'll be having a seeding event for that. That'll be coming out here in the near future. We'll have an article coming out so if folks want to get in and really get some amped up FXN rewards for participating, they can do that through our seeding event. And so we're looking forward to it. I mean, you can count the number of days here soon, you know, before St. Patrick's Day for sure. And so there you go. So from one saint holiday to another, we're between the two, we're going to have you know, our FXUSD launch.
Yeah, it's actually, I like the non-dependency on third-party LPs to provide liquidity, right? I think that's really important, because like when you're bootstrapping a brand new stablecoin, the hardest part is actually how do you build that liquidity for people to swap in and out of.
Exactly.
Yeah.
But what we're relying on is we're relying on Frax to bribe their pool and to keep the deep liquidity in their pool, and Lido, because we know they're going to maintain those pools, and those pools are always going to be deep. And so all we need to do, and I say we, like, I'm just being very metaphoric, but all
It's we. You're right. You earned. No, honestly, he earned the right to say
we're
we.
doing it in the back. All we're doing is basically taking the liquidity from that pool and minting FXUSD right from the Frax pool, FXETH pool, and doing the same thing with the Lido pool as well. And so because we don't have that liquidity cost, there's no bribing cost, there's none of that. It basically is as deep as the ETH LSD's pools are, is as deep as FXUSD will be, basically.
Yeah, so there's immediate liquidity all the time at whatever the redeem price is.
And whoever is paired with the ETH LSDs is automatically a quick route for FXUSD. Does that make sense?
Yeah. So like this also. So like if you don't have to pair with stables, like what will the pairings be? I mean, I know you are going to pair with stables, but is the
we're
idea
going to strategically pick those, because whoever will co-incentivize and whoever will take, it is always good for us to pair with stables, because we want to have some curve liquidity as well, right? So that in case the system is down, or in case it's bogged down or whatever, or slippage reasons, we want to have some liquidity on curve. But the main reason to have that liquidity is to really have utilization outside of the FX system, and to keep the APYs high in the rebalance pools.
Yeah.
So it's a much different system than everyone else that's doing a stable.
How does this different system, by the way, guys, actually benefits a few FXUSD and makes it unique as a token? Like, for example, on the peg aspect, I'm guessing that what you guys have been describing should have some impact on maintaining the peg, for example, right?
Yeah, well, that's kind of like one of the great things about this system, is because, especially with the launch of FETH, right? It was launched where it's pegged to 10% of the price movements, right? And it is like dead on, 10%. We just code it in, and what you do basically, you shift the stability from trying to maintain peg to trying to maintain system solvency with the X tokens, right? And so obviously with the collateral ratio, and then you have the stability pools, which help scale the system up and down so that peg always maintained, right? I mean, the only issue you would ever have is if you run out of X tokens, right? Same thing with FXUSD, except we just set the beta to zero. So there's zero exposure to ETH price, and so you just plug that in. And so what that does, from a system-wide sort of stability standpoint, is it ups the collateral ratio necessary for stability mode to come in from 130% to 133%. So it makes some minor modifications in that regard. So stability mode would be activated a little bit sooner than sort of FETH, but other than that, it's very minor. The peg will always be at $1 so long as the system is functioning correctly and there's X tokens in the system. So it's really sort of having to worry about the peg is really not a big issue. The only time you would ever have to worry about that is if sort of like the entirety of DeFi was exploding.
So I want to bring up the Dune dashboard for y'all, and here we can see how the price has performed over the past time. I think the last time we had you guys on, the XETH price was probably near bottoms. I think we were talking about like, oh hey, it's like really low right now. There'd been a sell-off in ETH, and I believe this was back in, let me just hover over this. Yeah, this was back in like November, when we last talked about this.
Why is Sam bringing up just the bad times? Why is
well, it was good because like since then,
it is Valentine's Day, sir. Let's
the XETH price since then has essentially tripled, almost. So at that time, I think I think I remember it was around like the 60 cents for XETH, and now it's trading upwards of like $1.53. I think the more important chart to look at is just the TVL that's come in. So, at the time we spoke last back in December, you guys had about 5 million in the treasury. Now that's on this like upward growth You guys are about up to 20 million in the treasury, and it's really interesting to see the splits and how it's pretty well maintained between xETH and fETH, that ratio.
How is that done, by the way? How is that done? Like,
What do you mean, DeFi advisor?
how is such a balance between fETH and xETH maintained or incentivized?
Well, it's just that, you know, like as it goes back and forth, right? So as the collateral ratio changes, so if there's less xETH in the system, then the leverage increases. So you can actually get more leverage at the time. And as the xETH ratio increases, then you get less leverage. So, you know, back at the time, we were looking at a collateral ratio of like 140, which is quite low at the time. I think that would move towards the rebalancing at the time. And now we're back up to collateral ratio of 187%. So it's really cool to see.
Imagine, Sam, a situation where now, you know, Frax starts voting for the emissions into the rebalance pool, and bribes start coming in from different LSDs. Then what you have is a higher APY on the rebalance pool, everybody depositing there, holding their stables there, earning yield. And then that pushes the xETH leverage up, which creates demand for xETH, for the X token, I should say, for FXUSD. There's various X tokens.
Yeah, there's a reason why our logo is a yin and a yang, because the two feed into each other, right? The one helps bump up the leverage. The F token helps bump up the leverage for the X, and the X, you know, helps protect the F token and also provide more yield in the rebalance pool. So it's been, you know, obviously, as you can tell from the chart. And by the way, big shout out to Diligent Deer for this Dune dashboard.
Yeah,
this is fantastic
dashboard.
But obviously, as you could tell, yeah, growth it's just been straight up. It's been number go up ever since launch, and so we're really excited about it. And we hope that, you know, like I say, once we hit a $250 billion, we'll call it. We'll raise the mission accomplished banner.
Yeah, and you know, people take both sides because, you know, a lot of people want leverage, and then a lot of people also just want to be earning yield. And so there's actually two ways to do that. You can put your fETH and soon to be xETH in either of the rebalance pools. There's one that redeems into stETH, and then there's one that redeems into xETH. So you have a choice. So you can. I kind of like the xETH rebalance pool, honestly, because
Me too.
Because that means that the rebalances always happen when prices are dropping, and the collateral ratio is getting higher, and the leverage is getting higher. So you're essentially taking a long position with xETH as prices are dropping. So you're almost like buying.
Point.
Exactly,
Yeah.
you're like buying the dip, and you're getting paid 22% for that as well too.
To do it.
Well, and that xETH rebalance pool also, because you're minting directly into xETH, you are directly minting into system stability. When you redeem back to stETH, you're just helping sort of like scale the system down. When you're minting into xETH, you are helping, you know, add cushion to, you know, the fETH price exposure, right? So xETH from a system health and stability standpoint is super important, and you know, it's been interesting to kind of watch, sort of like as folks kind of like invest into these two rebalance pools, which one folks kind of like have a preference for, and it's been very evenly divided, you know, ever since you know, we've had the launch of both the rebalance pools. And so been pretty interesting to see. So yeah.
How
So
does the go ahead, Sam? Go ahead.
Oh no, go ahead.
I'm actually kind of curious on like how is the system in general with FX, but also of course with FXUSD. How is everything designed to be as resilient as possible? Like what happened? Like right now we're seeing like calm days or pretty much good days, I'd say. But what happens when the market becomes, as we know it, like more, you know,
We get a big
unhappy.
sell-off. Yeah.
Unhappy? Is it like how is the system built to be able to withstand these times as well?
Can you say like a sell-off? Is that what you're saying? Like some giant,
for example,
like,
yeah, like if the market all of a sudden like significantly crashes for a day or a few days or whatever, how does everything? How can someone who is like just, you know, hearing like the term stablecoins for the first time and has no idea which kind of stablecoin can be more resilient than the other. But he likes the fact of hearing about a decentralized stablecoin. How can we actually make him feel and know, actually maybe even better, that the money is just gonna stay there, that everything is actually backed, and everything is resilient enough to withstand whatever.
Yeah, I mean the system has been designed with a very robust stability mechanisms involved. We have several layers. Once the sort of the collateral ratio of the kind of the, like for right now for FETH, like the backed reserve token stETH, if that ever gets down to where it's only 130% in excess of the F token, FETH or FXUSD, then stability mode kicks in, and that stops preventing the minting of F tokens. It also allows for free redemption of X tokens. There's also incentives involved as well for folks to mint X tokens. There's also sort of the stability pools then start to kick in, right, to bring the system back up above that. So it's the entire system is designed to scale up and down with these price movements. Additionally, on top of that, we have a double Oracle system that is tracking the price of ETH and making sure that any sort of depeg between ETH and stETH or whatever LSD it is, if there's ever a 1% difference, obviously the system kicks in and kind of locks things up, until that differential is settled, and so no minting of FETH or FX, and it's all automated. There's no human involvement into that.
That's really
so it's
cool.
very safe.
Yeah, and actually taking a look at the metrics so far, I mean, you guys have had nearly or about 6 months of data now. The collateral ratio has really never dropped that low, right? The lowest.
We've never had a stability mode mechanism event, and I mean, and arguably within that time, you could still say that we were, within
Pretty
sort of like
volatile.
the end of like the bear market, I guess. I mean, I don't know, depending on who you are and what your arguments are, but yeah, I mean, it's worked quite well for especially a system that is not massive or gigantic yet, and so it's done exactly what it's needed to do. And the X tokens have sort of fed the growth of the F tokens, and the F tokens have sort of helped amplify the leverage on the X tokens. And so I think we've seen the product market fit and the system performing well, and so it's just been really great. And now we're just excited to kind of like apply those principles to FXUSD.
So who's gonna build on top of FX? Like what sort of projects are you thinking could use this?
Well, right now we sort of have integrations in DeFi with a bunch of, well, I say a bunch, but several lending protocols. And because being able to utilize these tokens, as collateral or borrowable assets has been, quite an unlock. And so I think you're going to start seeing that be pretty prevalent within DeFi.
Really, I mean, it really, like the way that the xETH and FETH tokens are designed. I mean, you could set up a lending pool for xETH like pretty much immediately, because you know that you're always going to be redeemed through the protocol at a good price. There's no slippage, and it becomes much easier, because that's one of the issues when setting up lending pools is that, like, okay, like I can create a lending pool for this, but if there's not enough liquidity for me to actually redeem or like to sell into the LP, I'm going to get really bad slippage, and I'm going to get really bad price execution when closing those loans. But with how the redeem function works, it essentially allows for pretty much unlimited scaling of lending, because you know that when you redeem, you're going to get exactly this much, and that doesn't ever actually change, and there's no dependencies on these third-party LPs to do that.
One more thing too, we didn't really discuss LRTs, and obviously that's not one of the main backings for FXUSD yet, but FX will most likely here in this little short future be launching FNX pairs for LRTs that one day, depending on how big they are, they could be a part of the mix for the backing of FXUSD. But there's a huge opportunity here for the LRT space to grow and to help FX grow as well. So I don't think that that's been part of the equation, but I think it's a big deal right now.
We need more rehypothecation.
Of course, it's DeFi. It's what we do best.
Just daisy chain that ETH, baby. Right.
Yeah. So how many LSDs are going to be supported at the FXUSD launch?
2 right now. Right?
So it's going to be a guarded launch, as I say, and we're trying to kind of like weigh all of our options and making sure that we have everything set up to make it as successful as possible. So obviously things will be rolling out in stages, but yeah, we're looking forward to we're having a call this Thursday with Lido on Twitter, and so we'll be talking about their integration as well with it. So yeah, it should be pretty exciting. But yeah, ultimately, it'll be a guarded launch with with stETH and with Frax, and we'll be rolling things out slowly. But yeah, looking forward to it.
So is everything always going to be on ETH? I know you guys have a bridge to move assets over to Arbitrum and BNB chain, but is there like native minting on those chains, or is it just the bridge to move fETH and xETH over?
Yeah, we to keep the system as decentralized as possible, we do all the minting on Ethereum, and so the bridging will take the assets over to the other chains. But yeah, all the minting remains on Ethereum right now.
Yeah, but we never know. One day we might see FX on Fractal.
That's exactly what I'm.
It's a possibility.
I want to ask you about like let's expand this line of thought. Maybe like when do you see this happening, for example, as a possibility, and also like what kind of benefits will FXUSD be able to both get and bring to an ecosystem like the one being built on Fractal, or whether we choose to expand on any one of the other L2s?
Well, I think that, right now we're focused on trying to keep stability. And so like Kmets was saying, it's about having a guarded launch and making sure that everything works the way it should for FXUSD. But if you can imagine a future down the road where, FXUSD is paired with various stablecoins on Fractal earning, flux points, I can see something like that. And remember, again, the more pairings we have outside of the FX system, the higher the APYs and the rebalance pools are. So there's obviously an incentive. Plus, we want to be, I'm sure that, and again, I'm not privy to all of the conversations, but the idea to have FXUSD on many chains is the goal, because that's what allows these APYs to be as high as possible, and to incentivize LSDs to keep minting and to keep bribing and on these various different pools.
Yeah, I really like the just set and forget nature of the FX protocol. You can essentially just choose one thing by putting into the rebalancing pool. Like let's say you've gotten a run up and you feel pretty good, you can just throw it into fETH, and if you ever do get rebalanced, you're going to go back in ETH and have that exposure again. So it really is a nice, easy product for people to understand and to utilize.
Right. So one little piece of alpha here, I know that I've mentioned it on some of the community calls that I've been in talks with Trident, and they are very interested in doing a pairing with PYUSD and FXUSD. And so that
Vestor, can you maybe explain a bit for those who are not familiar, who exactly are Trident?
Yeah, Trident Digital Group is the company that was hired by Paxos to handle the liquidity side of PYUSD. So they're doing a lot of the DeFi stuff, integrations with Aave and different protocols across the DeFi. We happen to be talking to them early on, as early as a few months ago, when they created their curve pool. And I've been helping them with, trying to figure out what the best structure would be for incentivization. And, even help them with the Prisma emissions, which I think is probably the low-hanging fruit for them being able to develop as much TVL as possible. And so that dovetails into FXN because very similarly to Prisma, FXN is also going to be, a very, very hot emission, and it's going to be valuable for them. And since FXUSD is a stablecoin, PayPal is willing to, or I should say tried it, is willing to give it a shot and do some co-incentivization with FX. And what that allows us to do is it, besides giving, like I was discussing before, it allows more FXUSD out in the wild. But besides that, it gives a huge amount of utility to FXUSD, because now if you're holding that and you're earning, say you're earning 20% APY in the rebalance pool, you can quick swap to PYUSD, send it to your PayPal account, and have it, go into debit card and into your application. So it creates a lot of utility for FX. That's probably happening in the next few months as the FXN gauges get rolled out, but it's definitely on the table.
So basically, just to make sure I get it right, you guys are basically saying that someone can actually will soon be able to mint FXUSD, start deposit it, and start earning from it in a very safe way. We can say relatively
a very relatively safe way, earning ETH yield, plus
and then
FXN emissions,
and then
swap it to
some of the
PYUSD.
yield for PYUSD and pay for some groceries and stuff on his everyday life.
You got it, sir.
Sounds pretty good, man. Sounds pretty good.
So I do want to bring up this chart. This is the emission chart.
That's financial advice, folks. Do your own research. I mean it.
So this is the emission chart. So we're at where are we? We're right here right now at 2024. So the majority of the emissions that are going to come over the next year. So if we're looking 1 year into the future, the majority of the emissions are going to come through liquidity incentives. And then also back into Aladdin DAO as well too. So I'm guessing all those tokens that go into Aladdin DAO stay there, right?
Those are locked as VEFX max locked. Yeah.
Max, and I mean, but they won't come out. They essentially go in.
No.
They're not going to the market.
That's pretty cool. And so the liquidity incentives at like 18 months from now, you'll see a big boost that comes out for those liquidity incentives, the treasury reserve. So it seems like the majority of tokens are just going to stay locked for as long as possible.
Yes.
And when we're talking about the treasury and also Aladdin DAO, I mean that covers pretty much like 3/4 of all the FXN tokens. There's not going to be a ton of actual FXN tokens that you'll be able to buy on the market.
No, sir, there is not. So not financial advice.
So like looking at this, there was the I mean, if we're looking at 18 months from now, the actual liquid amount that's going to be out there will be 190,000 for liquidity incentives, which will be free flowing. The IDO, 100,000 from there, also the initial liquidity. So that's another 120,000 there. So that's about 320,000 tokens. And then
and you're not taking into account anything that might get locked into CVX or into a stake DAO.
But there is also the community booster tokens, by the way, that are slowly being also distributed.
I only lock community booster tokens, sir.
Yeah, those also, a lot of those that are coming out also have like a long vesting as well. Not the liquidity incentives, but a lot of the other things do. And that's very standard for all of Aladdin's protocols as far as sort of that token distribution and sort of the emission schedule. Like Concentrator, like all the tokens are out now and the vast majority are locked. Same thing with Clever. So that's kind of how we do things at Aladdin.
What's interesting about Aladdin, I'm just looking at the chart, is that right now the market cap for FXN is what? It's
4 million.
4 million. The fully diluted valuation is a little bit bigger, but looking at the Aladdin DAO price, it's sitting at a $10 million market cap, and they'll be capturing. Let me go back and take a look at that Dune dashboard.
30% is going to be locked.
Well, Yeah, essentially at max emissions. So in 2028, roughly almost half. So like 40% of all the tokens go to Aladdin DAO. And so I don't know. There might be some interesting like knock-on effects from.
By the way, I don't even know if people know this, but outside of the community, but the ALD tokenomics are revamping, and
Yeah.
the total supply was supposed to be 1 billion, and it's actually just a few like a month ago or something like that. It's past that. It's not going to be a billion. It's going to be 150 million, very close to what it is already now. So
So it's like fully circulating already.
almost, yeah, almost.
Yeah,
And
we should.
something-
By the
Go
way, you
ahead.
can see on CoinGecko, I think if you're looking, that the fully diluted, like it actually, it seems to be like already updated. That it's only going to be 150 according to the way I calculate it. At least I don't know. It just seems that this way to me. Although the total supply still says like 1 billion there, because I think they didn't update that. But the public has the right to know, as they say.
Yeah. So the Aladdin token, just taking a look at it right now, ALD token, it's earning 11%, and that is pretty much at max circulating supply. If you guys are reducing down to 150 million right now, so.
Yeah, just so folks know, once it's still minting, it's still, it's kind of an old rebasing model on the X tokens. And so once we hit 150 million, the minting capability will be shut off, and the minter itself will be burned, that portion of the contract. And then
which just to show, I mean, like looking at the CoinGecko circulating supply, there's 148 million right now. So there's only like 2 million tokens that can be minted left.
And yeah, and so we anticipate we'll be reaching 150 million somewhere here within the next month and a half or so. And so just that's sort of an FYI. And then on top of just like not only have capping the supply at 150 million, we'll also be integrating VE Tokenomics. And so obviously, that's sort of like where the light bulb goes off of like, oh, well, there will be some sort of some revenue sharing as well for VE holders. So I mean, Aladdin has 3 very successful protocols right now with Concentrator, Clever, and FX generating revenue. So I mean, you don't have to put your thinking cap on too hard to realize what's going to be coming down the pipe for ALD holders.
Yeah, I really like the FX idea, because like it does allow for pretty much infinite scalability.
Right.
It can suck in all this staked
And
ETH and the yields are big.
LRTs.
Yeah, LRTs, pretty much everything can come into it.
And Sam, something we didn't really touch on, but a very important point, like 50% of the staking yield that goes to the rebalance pool goes to FX treasury. So a huge amount of fees is going to be going to FX, and then that subsequently goes to CVX, FX, and stakers, or staked out stakers too. So, and obviously VEFX and lockers as well. So
By the
it's
way,
a big fee machine that's being generated here.
how much of the actual fees go to the VE holders with FXN, for example?
Currently 75%. Is that correct, Kmets?
So 50% of all the revenue goes to the rebalance pool, right? And then the remaining 50% then gets split. So 75% of that goes to the VE holders, and then the other 25% goes to the treasury.
Right.
Cool.
Well, very cool. I'm really excited for everything, and I think that FX is really primed with the upcoming launch of FXUSD to see some pretty incredible growth. We're at 20 million TVL right now, and when we have you guys back on in a couple of months, it probably will be at 100 million based on the upward trajectory that it's on right now.
I think so.
I don't know. Is it going to be capped or?
Yeah, as I said, we'll have like a guarded rollout, so we'll do it very similarly to how FETH is right now. You know, obviously to make sure we're maintaining system stability and everything's working smoothly. But yeah, I mean, once we hit a cap, we don't wait around. We're gonna let that baby go up. I mean, there's only one way to get to $2 quadrillion, man, and that's by upping the caps.
Cap by cap, man.
That's right.
Yep. Exactly.
Well, very cool. Well, thank you guys for coming on today. Really enjoyed the chat. And for everybody who is interested in FFX protocol, you can go to fx.aladdin.club and check it out. We'll have that in the show notes. Additionally, you can go to the Aladdin DAO website at aladdin.club as well too to go see the other products that Aladdin DAO has, which is Concentrator and then Clever, and then also their Aladdin DAO V2. And yeah, so make sure to go and follow Cryptovestor and Kmets.
Most def.
They have the best Twitter content.
No, man. You know what? I think that ever since these two got involved, especially in the last few months, I think Cryptovestor got more and more excited about Aladdin and its projects. And I'm pretty sure that so many people have heard about Aladdin just by following Cryptovestor these past few months. He's really been everywhere on X and on other platforms as well, actually, spreading the news, whether on public or whether on direct messages, pretty much to the whole world.
Aladdin is it's a great community, a great community of people. A lot of bright minds, and happy to be a part of that, and looking forward to this launch and helping this thing grow as much as possible.
Very cool.
Respect.
Yep.
And Kmets needs no introduction. You know what I mean? Kmets, just look at that honorary llama, and you can figure out yourselves.
I'm jealous of that llama.
Realize who this gentleman is.
Well, you're very kind, sir, and I'm just happy to be a part of it and share the good news of Aladdin and FXUSD that are coming down the pipe, and obviously to welcome Sam into the A team as the newest contributing member, obviously. So it's a non-paying position, Sam. So we thank you for your volunteer work. So.
We should make him an honorary A-team member or something like that. Maybe have him on as a guest at some point.
Absolutely. Yeah. We'll get him like a captain's hat with like scrambled eggs on it,
Can be pretty good. And by the way, follow us at the A-team DeFi as well. Doing a lot of Aladdin content and some interesting stuff. Beyond that, even just make sure to follow us if you're interested. And Sam, thanks a lot for hosting this one.
Yeah,
brilliant
definitely.
As always, man.
Always,
yeah. Fantastic job, sir. Thank you. Happy Valentine's Day.
Happy Valentine's Day.
Amen, everyone.
Go buy some flowers.
Financial advice. That's our only financial advice today.
That's life advice. That's life advice. That's not even about just about finance.
All right. Thanks, guys. And we will see you tomorrow.